What is happening with the euro against the US dollar? Is it true? Is the US dollar getting so weak that we can expect that this is continuing? Let's have a closer look at the chart, because I think there's a chart technical situation worth looking at it. There's a chance for some trading, and if you're on the wrong side, maybe you're interested, what shall I do? Where are points where I should or can react? So in this case, you can see, like I normally use and prefer, I have 4 charts. It's all the euro against the US dollar at plain vanilla, the spot rate here in this case. Of course, it must be quite similar if you have a look at the future. In this case, I have weekly chart on the left upper. I have daily chart here. And so what you see here is exactly what you see here at the very end. But you don't see this so clear. So I switch from here to the 4-hourly chart you can see here, and a 5-minute chart to have an idea about the things happening in the latest few hours, so that you can see some more details here, what is going on. So I will focus at the very beginning on the weekly chart, just to give us an impression. Where are we? What are we doing here with the chart? Where are we come from? And where shall we go in this case? So this is really the big picture. We saw this low here in September 2022, and you could see we came from above before. So something was starting from here, and it was a strong move to the upside. After that, the market was meandering back and forth, not quite sure what it is. This is something we need to have a closer look at, because this is a typical situation we call a sideways correction. Normally, we all know strong corrections. They look like this roughly. It's a 3-wave pattern, and you can see that this is way lower than the starting point. In a sideways correction, you also have a 3-wave pattern, but you can see that this point is maybe same, sometimes a little bit below, sometimes above the point where the correction started. So in this case, it is quite obvious. It looks very much like a sideways correction, but to be honest, we don't need to dig too deep here. We don't need to go too deep into the details. Even if you have some alternative counts here compared to the Elliott wave system or the idea, it's all leading into the same direction. What I think is one of the better one is we have been seeing something strong to the upside, some kind of an A pattern, a B pattern, and a C pattern. So this is something normally a corrective pattern looks like, a sideways correction looks like this. Even if you think, no, this is the end of the up move, even if you think, no, this was the end of the up move, it is just an alternative count for the same idea. Roughly, we can say sideways correction, first one, ABC, the sideways correction. And if this is done, the market should do the strong thing again, which was this up move. So I would expect, if the market is ending the corrective pattern, this is a question, we need to answer this. But if the market is ending the sideways pattern, then sideways was down. We need to continue the trend we had before. This is what you could see here. So this is a really typical thing. Here you can see strong movement. We have a corrective pattern and a continuation. In this case, this is a little bit higher. So it might be just an ABC pattern, a sharp correction, or maybe even later going way higher. But I don't want to think about this. This is too far from now. We have too many political influence. We can expect that maybe the situation will shift from one end to the other. I don't need to think about this. Currently, I want to see what is happening here. Is this situation really coming to an end here? And can we expect that the market will turn? And this is a really nice situation currently, because we can ask Fibonacci to help us a little bit. The start of the up move was here. And now we can think maybe the end of the first up move was here, or here, or here. I don't think like this. I think it is more like a 5-wave pattern, 1, 2, 3, 4, 5, something like here. Let's take the middle one. The impact is not really different. So we don't need to care so much which is the ending. Normally a corrective pattern I like very much to see going into this area here. Keep in mind 38.2, 50%, 68.8, 61.8. This is a typical setback. For example, if you have a setback after a strong movement, you can expect this is roughly halfway, a little bit higher, a little bit lower. So you can estimate with these levels here. So these are points where the market may turn and continue. We had this situation here already. Strong movement to the upside, an ABC pattern to the downside, and a continuation. It could lead to even higher levels, but it did not. It ended. But we are still with this level inside the typical corrective level where I want the market to be. So even this situation, I think it's a good situation for a turning point to higher grounds. So everything seems to be in a typical manner. Strong movement to the upside, corrective pattern to the downside, typical size of a corrective pattern. So now we need to find, is this maybe coming to an end? Is the down move coming to an end at that point? Do I have a good impression? Is this coming to an end? We may have a last glance on the internal structure. I told you already we have an A, B and a C pattern here. If this is a sideways correction, the highest probability is it is a flat correction. And a flat correction is corrective at the beginning, corrective in the middle, and the last one is an impulsive move. So first let's check, is this maybe a typical impulsive move? If the impulse seems to be at the end, then the chance for a turn is way higher. And if we see something indicating that the market is turning, it gives us a good idea. Okay, now we can do something. So let's switch now to a lower time frame. This is the weekly chart. We were talking about this last part here. This is what we see here on a daily chart. Okay, let's have a closer look. The market, this is all part of the corrective part, and that is the highest point, so the possible beginning of a impulse move. Okay, impulse. First move to the downside. Corrective. Second move to the upside. The next down move. 1, 2, 3, 4, 5. Third move finished. Corrective pattern. Fourth move to the upside. And something, let's say, more or less shaky here at the very end, which might be, the professionals beyond you know this already. This might be something like an ending diagonal. If it looks like a corrective pattern but is going into the strong direction, which is here in this time frame to the lower side, if it's moving in a corrective manner like we have it like here, this is very often indicating an end of a trend. The name is ending diagonal, and if this is an ending diagonal, the chances are quite good that this pattern is coming to an end, which would perfectly fit into the 1, 2, 3, 4, 5 wave pattern. So just by shape, yes, it might be an impulse move, what we expect at that end of the sideways correction. Second, at the end of an impulse move, there is an ending pattern, which means looking very corrective, but still into the direction of the trend. So we have all what we need to search closer for a turning point. And some of you may have seen that at the very end there is a turning candle. In this case, it is a hammer, which is indicating with a small body and the long tail on the lower end that the market may turn. So the first possible start to get into this position might be if the market is going above this level. This is something we use in this case, and some of you may realize for our services we said this might be something for you for trading this one. So if the market is going above this level, it's a long position. The stop typically for this pattern is below that. So entering here, when the market is breaking above this pattern, this candlestick pattern, the hammer, and the stop is below this one. So everything clear from that perspective. For the service, unfortunately, we have a rule. If the market is going too far without us, we cancel this. You may think this rule is stupid, yeah, but sometimes as an institutional trader, you have to stick with the rules. It is still possible, or was possible, to enter at that point here as well. I know some of you did this. If you did not like it, okay, maybe you missed the opportunity, but you could see, okay, if you're early, this was your entry point. If you're a little bit late, you had a few days later also the possibility to enter the market to the long side, because this had a good chance to be finished. At the same time, we had the turning indication from the hammer, and the market turned to the upside. If you're a little bit angry, yeah, that's nice. Why showing this video now? Now it's too late. Not necessarily. Please keep in mind, if it's really the first move, if it's really the ABC sideways correction, I would expect that the market has a good chance to continue what it began in 2022 already. So I see a good chance that we have a long way to the upside, way below, beyond, higher than these levels here. So this is a possible outcome, a really positive outcome here to the north. I have another possible outcome, which is quite more bearish. This means if this is only an not an ABC, a 5-wave pattern to the downside, and now the market is just going corrective, where should this corrective pattern end? The typical target for this one is, let's do it correct. A typical target is the same Fibonacci area I've mentioned before, 38.2, 50, 61.8. So my target for the correction would be somewhere here. Some may think, yeah, but we are very close, so it's done, right? Take care. The end of the correction is here. Is this a corrective pattern here? I think there's a good chance. This looks really like an impulse move. First, second, third, fourth, fifth. Maybe the fifth is continuing, I'm not sure. But what we see here looks not like a corrective pattern. It looks very much like an impulsive move. Indication is strong movement. Can you see how fast the market is moving upwards? Even faster than the down move. So even when reaching this area, I'm sure, or prefer, it's not the main direction which is over. I think it is the first part, and after a corrective pattern, we have a continuation into this area or even beyond. As I said before, that we have a good chance that the market will continue. So I don't want to say the worst case, but one of the worst situation is that the market is only proceeding to roughly this area. This is just roughly said 1.06 until 1.085, roughly said. If the market is inside, there is a chance that the market will turn, maybe also influenced by the geopolitical situation or other influence, the Fed, for example, or the ECB in this case, or whatever. We will see this. This will be decided somewhere here, not necessarily exact at this level, but somewhere around there after such a pattern. So I'm quite confident we have a really high chance, never 100%, but a really high chance that the market is reaching this area sooner or later. And then it will be decided whether the market will continue even way higher or maybe turn around and get even lower. I will not say that this is not possible, but to be honest, from the overall view, I still prefer that the market will continue to higher grounds. But as a trader, we are prepared for both directions. So if we see that the market turns, if the market is now going strongly downside and weak to the upside, then of course we have short indications, so we can close position, open a short position, for example. It's this typical behavior. So at that point, we can find out, is the situation still valid for the bull market or not? We don't need to decide now. So you see, I see a high potential that the market will continue to higher grounds. But what I also expected is that the market soon will have a breather, will have a break, a corrective situation. We have moved strongly, and if you are not into the position here, as I said before, overshooting the hammer candlestick pattern, then you have another chance whenever the market is coming down in a corrective way to enter, to upgrade your current position, or to open a new position when the market is overshooting to the intermediate high, the normal triggers we use, or if the market is giving us another turning indication like we have seen here with a hammer situation, to enter a long position a little bit lower, even a little bit lower. So that's what I expect currently with the euro against US dollar. So this just raw, this pattern we've seen here has a good chance to come to an end, let's say somehow soon. The corrective pattern 1.06, some say maybe around this level, which is the intermediate highs from early in December. You know, there's the good chance we have also some April 2024 levels here. So I see a good chance, even if the market is continuing roughly around this level, maybe 100 pips or a little bit less higher than where we are now, that the market will stall the push to the upside. And then for me, it's really important to check, will we come back in a corrective manner? This is giving me a really good situation, because in this case, strong is the impulse move, down is a corrective pattern, and then I can double check how far is the market going back. We just think currently is the market here at that level. Of course, you have to redraw this. If the market is continuing, you have, of course, to redraw Fibonacci at the given highest point. But currently, this is the highest point. So if the market anytime from now is going into this area here, 38, 50, 61.8, in a corrective pattern, which is like this, or a three-wave pattern, it is a corrective pattern, then we have a chance to re-enter or to open a first position or to expand our current position and continue for higher grounds as we've seen in the daily chart. So if you are long already, I would say the chances are really good that the market will continue, at least into the Fibonacci zone we've talked about before. I can imagine, I think there's a high potential that roughly around these levels here, it is roughly 1.06, can be a little bit below that, but roughly there is a chance that the market will have a break, will turn around a little bit. This is just an educated guess that this is a typical point. It's not given, but we will see when it happens. So if you're afraid to lose some profits, you may think about taking profits there or trailing the stop a little bit closer at that point. If you want to re-enter or to upgrade your position, wait for the corrective pattern into the area, trigger at the intermediate high, which is maybe a shaky move to the downside. If it's only an A, B, C move, it's roughly the same. The intermediate high, last low, previous low. The high in between is the trigger for that situation, for at least a continuation into the box or even to higher ground. If you are by chance, maybe you forgot to check this, you did not use a stop so far, on the short side, so into the wrong direction, completely surprised by the situation. It is up to you to think, can I survive a little bit higher? Hopefully the market will turn. It's not a promise. It would be typical that roughly around these levels the market will turn, but it's not a promise I can give you. But if the market reaches this, I think the chances for a turn is quite okay. Can you survive this? Is the margin still okay? Is your account still okay then? Maybe it might be a possibility to wait for this setback and then hopefully close somewhere here. Or if you're super lucky and the market is not coming down correctively, but impulse, like an impulse move, then you can stick with the short situation in the hope that the market will continue. Of course, there is always a chance that this is happening. Many people think, I understood what you drew. This will happen. No, it's not 100% sure. There's always a chance for an alternate count, but I think the overall situation is giving the best impression for higher grounds, at least here into the middle, but even higher grounds in the aftermath. Only if the market is turning around, plunging strongly, maybe similar to what we see here in this part, coming up in a corrective manner, then you have to think about a short position. This is typically a short position. For example, last high, previous high. This is an entry point to continue, maybe for lower grounds. Exactly the same we can have if the market is falling strongly. Currently, this is not what I expect. And currently you see that more or less strong to the upside, weak to the downside. Here it's not so clear, but you can still see strong. The downside is not so easy to understand, to be honest, but I would not recommend, and this video is not given for 5-minute traders in this situation at least. The idea is roughly the same on all time frames, but here you cannot see it exactly, and the video is coming up too late for you to see in the 5-minute chart. But you have now an idea, I hope this is helping you, to see what potential euro against US dollar has. Chart technically, we have a good chance that the market has a big potential to at least these levels here, or even overshooting this level. And some people around me said, maybe Trump likes to have a weak US dollar, because a weak US dollar will force more US citizens to buy American products, because foreign products are more expensive, and will ease foreigners to buy American products because they are easier to buy. Both is helping Trump by reducing the foreign trade deficit, which is one of the things Trump likes. So I think it's not so strange that the US dollar might become a little bit weaker. This is not a promise, but it's just a side note. So the fundamental idea may be in shape with a chart technical situation in this case. So if you like videos, more videos like this, if you want to get more impressions on different markets, just give me a thumb up and like this video, maybe subscribe this channel. It would be a big help, because this is quite new, and I want to improve, give more content here to this channel. If you want to have more, then give me a note, give me a feedback, a comment here under the video. This helps a lot for me and the YouTube channel to grow. So have a good time. Crossing my fingers for you. Seeing you soon. Bye bye.